So it's not and people conflate two things. They conflate, um, does the credit-based system, can the credit-based system allow deflation? The answer is no. And they conflate that topic for, is deflation the natural state of the free market? So what those mean is, we've never lived in a global free market. We've always lived in a control system. And all of the books and anything we've ever read reinforces that control system and reinforces all the neurons in your brain to think that's normal. And it's totally not normal. Well, it's normal for the past, but Bitcoin imposes different rule structure on society.
Bitcoin has just shattered expectations, surging to an awe-inspiring $106,000, and traders are now setting their sights on the extraordinary $140,000 mark. But here's the twist. Despite a brief 1.4% dip and still hovering just 6% below its all-time high of $109,000, every indicator points to this rally being far from its peak. The excitement doesn't end there. Bitcoin ETFs have seen a mind-blowing $2.9 billion in net inflows over the past 2 weeks, a sign of intense investor confidence and growing demand. If this momentum continues, prepare for an explosive ride that could leave previous highs in the dust. Here's where it gets even more intriguing. Tech visionary Jeff Booth drops a bombshell. What we've been taught about deflation is a lie, designed to protect a system that's rigged against us. In reality, deflation is the force driving progress, and Bitcoin is the key to breaking free from the chains of this manipulated economic game. With investor sentiment soaring and ETF inflows continuing to climb, Bitcoin's path seems unstoppable. The CBOE Volatility Index has plunged, signaling a bold embrace of risk. All signs point to Bitcoin smashing its past records and creating new highs. Stick around as we bring you more clips from Jeff Booth's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So is the natural state of the free market deflation? And everyone, if you just asked them that question or posed it as a statement, they would nod their head like you're doing now. It's amazing, because what it's actually saying to you is you can feel the truth. Even though if your brain can't wrap your head around it, the nodding is actually you recognizing clarity, the truth in those words. But if we go a little deeper on why is that true? It's true because we make up the market. We are both buyers and sellers. And we choose in our lives to gain more value. We constantly choose to gain more value. And any entrepreneur or anything that is created new, that has to compete against what was there before. And the only reason we would choose it is if it gave us more value in our lives. So you have a global system where us as actors, both as sellers or buyers, whether it's a service or a product, seller and buyers, we are part of it. And if we choose more value and the entrepreneurs have to compete with everything that existed before, then the output of that has to be deflation. That fair?
Yeah.
It's impossible to dismiss what I just said. It's a first principle. It has to be true. So let's now shift gears and let's go into the opposite system where our belief is reinforcing the world we live in. And so in 2% inflation is normal. So if the natural state of the free market is deflation, and we've already said that that's true, then and where does inflation come from? Where does the 2% come from? Because the natural rate should be the productivity rate of the world, which would be negative. So it might be -3, it might be -5, it might be -10%. As technology went faster, it might be -20%. So so where does 2% come from? So what is that? Where does that inflation come from?
I would say the printing of money.
Exactly. It comes from the manipulation of money. Whatever you wanted to call it, you could call it QE, you could call it fiscal spending, you could call it monetary easing, you could call it liquidity. It comes from the manipulation of money to create more currency units to be able to create inflation. It's the only place it comes from in a longer term. It could come from, in a short term, a scarcity in the market or an earthquake that created something that people raise their prices, but long term it can't. Over a longer term, it only comes from that. It only comes from the manipulation of money. So then it forces us down another question. Why have we built society, and why have we always built society on it, and who would win and who would lose on a society that has to steal the productivity that should flow to all of us to convince us that manipulation of money was normal? Instead of saying manipulation of money or liquidity, say theft of your time, theft in money was normal. You couldn't survive in a system that allowed the free market to work. You had to have something that stole people's time. So instead of saying, what would it look like with liquidity or QE, just reinsert, what would it look like if it was okay for people to steal other people's money? What would society look like? What would they believe? What would they, and so you can start to see, and does a productive economy require 2% inflation? And there's a harder question, because most people would say, yeah, it does. But then instead of saying 2% inflation, does a productive economy require theft in money? Because all an economy is trade with other people, new ideas, competing to provide you value. Why would that require theft? And if you lived in such a system that required theft, and you contributed to such a system that required theft, wouldn't you expect that as technology moved faster trying to free you, that system would move faster in the opposite way, trying to control you?
Why is that the case?
So because it has to, because we built a system based on credit, and that system based on debt, where money is loaned into existence, must grow forever, or the money gets wiped out. There is no money. If it allowed deflation, all of the money that you think is money, it collapses, and every asset value that is backed by that tremendous amount of debt also collapses. So every single thing that you measure your life in collapses to zero. And it wouldn't collapse to zero because what would happen is dictators would rush into the void and convince you to allow them to control it for you. But ultimately, that system cannot allow deflation. Reality is debt is rising faster than it was, and it has to. So it's a perception of, most people are completely fooled by that. There has to be way more printing. There has to be way more decentralization out of that system. That system cannot resolve that paradox from that system. Bitcoin will reprice the entire world. If you own one Bitcoin, you own 121 million of all of what will ever come. And not all of which will ever come in value as you perceive it today, or the purchasing power of what you receive it today, in a world that has faster and faster deflation. So what that means is that Bitcoin becomes infinite in purchasing power in time. And why is that? And so there's 5 aspects of Bitcoin that those combined make it very different. Open, anybody can move to it anywhere in the world, doesn't require somebody's permission. Decentralized, secure, protocol bounded by energy. So you have an open, decentralized, secure protocol bounded by energy. Protocols are winner take all. They're not technologies. Protocols build in layers, and there is, you're on it or you're off it. In the internet, North Korea is off of it, right? Look at what happens to their citizens. Everybody else on it. Can't negotiate with it. It imposes a new discipline.
Bitcoin is defying all odds, with whales, the largest investors, actively increasing their holdings, even as the price surges to new heights. Glassnode's Bitcoin Accumulation Trend Score, ATS, has hit an all-time high of 1, signaling massive accumulation by these whales. This mirrors a pattern seen back in October 2024, just before Bitcoin skyrocketed from $67,000 to $108,000, fueled by political shifts like Trump's election victory. Yet, there's a catch. The rise of paper Bitcoin in the form of ETFs and dollar-pegged versions attempts to reintroduce central control, something Bitcoin was built to escape. These fake versions may appear to be the same, but they are mere shadows of the real thing. Unlike Bitcoin's decentralized protocol, which turns electricity into an unbreakable truth, these paper versions don't have the same robust, trustless infrastructure. They may seem like a shortcut to Bitcoin's potential, but they are susceptible to manipulation and control. With whales aggressively accumulating, Bitcoin's $110,000 all-time high is within striking distance. The recent pause in US-China tariffs only adds fuel to the fire, confirming that the market sentiment is overwhelmingly bullish. Bitcoin's true rise is inevitable. It's just a matter of when. The best is yet to come. Let's watch more clips from his interview.
So the way that mining works, the way the consensus mechanism works to audit the mining and make sure that they've followed the rules, is it bounds it to energy. So you have something bounded to energy in a system that's decentralized and secure. So now you only have to worry about two pieces. Could it be broken? Could it be centralized or become insecure? And there should be nothing else you would worry about, because if it stays decentralized and secure, it's not if, it reprices the entire world for sure. Not maybe. It's every single thing. Your houses, the way of life, your political systems, every single thing is changed by this. There's nothing untouched by it if it stays decentralized and secure. I've spent a lot of time, tons of time, thinking about where it wouldn't, where it would break, and I can't think of, not that we wouldn't have short term. Somebody thinks it's going to, the short-term price influences and everything else, but I can't think of one. I won't get into it on this podcast of where this is going to break. And the primary reason why I can't get into one, where it's going to break, is when you actually understand that we are Bitcoin. We literally, by running nodes, by contributing to this network, the more that you do what you're doing on your podcast, teaching a whole bunch more people on why this is so important in their lives. And some of those people will go deeper and they'll also run nodes and they'll contribute and they'll spend in Bitcoin. We are both the map and the territory. And so the more energy we're giving to the system and the more honest, that's a truthful, honest protocol, and more people that understand it, and they unplug from this other broken, terrible system that's just sucking out their energy, and they move to this beautiful system that's competitive but cooperative, right? That everyone wins on it. They're never going back. And so we at the bottom of that is the consensus mechanism that keeps it secure, that keeps it decentralized. And you're constantly looking, you're vigilant for where are there attacks, where could there be attacks, where are the risks. And many of the people that are in Bitcoin, I know myself, you're so far out in front of seeing these attacks and investing in things that prevent those attacks, that when people talk about some of the attacks, you kind of go, that's cute. You think because you realize how far this is moving beyond that. Let's imagine, right? There's a bunch of nodes, and those nodes are you, me, a bunch of people in this, and then the economic nodes on top. We're spending our money on top of this, and then there's a bunch of others that have aggregated their Bitcoin into a centralized system. Let's say that because the US dollar has to still be a centralized system. It has to be an inflationary system. And what that means is people will trust that because they're measuring in that, and they'll trust the ETFs, and many will go outside of self-custody and trust somebody else. They'll pay a fee to introduce counterparty risk because they're so used to trusting other people. And they'll trust the US dollar, and they'll trust or a different currency, and they'll continue to trust that. These systems are opposites. Free market is deflationary. We know that's true. The system can't be. So whether this system is backed by Bitcoin or backed by gold, if it's inflationary, then it has to rehypothecate the Bitcoin or the gold. It has to suppress that price. It has to do all of these things, and it has to attack the free market in time. And so if you have your Bitcoin there, it's not your Bitcoin, but it doesn't change my Bitcoin, because when that system says you can only use one day, that wouldn't even happen today, but in one day, if that system said you can only use US coin, US version of Bitcoin, all of the people running nodes would say, take your US coin, and it'll look a lot like Bitcoin Cash today. And there has to be economic activity to be able to continue. That might be a chain split. It might create a whole bunch of things. It might create some pressure, but it actually didn't change Bitcoin at all. It just changed Bitcoin for the people that are using the other Bitcoin. Store of value will fail if it's not a medium of exchange. When I say that, people go, baloney, gold is a store of value, and it didn't fail because it's not a medium of exchange. And I go, oh, really? Well, gold's price should be, if it wasn't manipulated, should be about $80,000 an ounce in a free market. But suppression of gold derivative contracts through pieces of paper that you can print forever can suppress gold forever, and that's centralized. So gold did fail as a store of value, and it's failed multiple times as it gets repriced, centralized, taken over by governments in a 6102 attack or something. It's constantly failing as a store of value. So how could you see yourself in an inflationary environment, and that inflationary environment has to centralize Bitcoin, where Bitcoin didn't, if you're a part of that? It has to. So gold is in fact, people that are saying, well, gold didn't fail are actually making my point, because it's failed numerous times in history as a store of value, or it would have been priced at $80,000 an ounce today. And so Bitcoin, if you wanted to use the same example, if it got centralized and then suppressed in price and suppressed forever, and you didn't control it because it was all paper Bitcoin, and you didn't have it off in your own exchange, that you were auditing it, how would you know? How would you know that there weren't just paper and derivatives contracts forever? You wouldn't. It would be suppressed. So it would fail as a store of value, or it would fail as a proper store of value. I think it would still do well if you're measuring it in a US piece of paper, but it certainly wouldn't be the first global free market that ever existed. And it would certainly be manipulated for forever.
Arthur Hayes' bold prediction of Bitcoin reaching $1 million by 2028 isn't mere speculation. It's a logical conclusion of our failing financial system. Much like Jeff Booth's analysis of forced inflation, Hayes anticipates a perfect storm of treasury market collapse, capital flight, and reckless money printing. These aren't isolated events, but symptoms of a debt-based system that, as Booth explains, can never allow natural deflation. The parallels are striking. Booth demonstrates how credit systems must constantly inflate to avoid collapse, while Hayes maps out exactly how this will play out. As Treasury yields spike and confidence erodes, the Federal Reserve will be forced to unleash unprecedented quantitative easing. This liquidity flood, as both analysts agree, won't save the system. It will simply accelerate the rush into hard assets like Bitcoin. Currently trading above $102,000, Bitcoin's 30% recovery from recent lows suggests this transition is already underway. The volatility Hayes warns about reflects Booth's core premise. The old system will fight viciously to maintain control, but mathematics always wins. Bitcoin's fixed supply and decentralized nature make it the ideal hedge against currency debasement, exactly as Booth's deflationary free market theory predicts. When Hayes describes investors fleeing to Bitcoin as bonds crumble, he's echoing Booth's vision of money returning to its natural state. The path may be turbulent, but the destination is clear: a world where sound money can't be manipulated by desperate central bankers. Two analysts, one inevitable conclusion: Bitcoin is the exit. As we wrap up, Do you think inflation is a deliberate design or just an economic inevitability? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.